afternoon. It's Dustin with Highway One Capital. It is Wednesday, June 18th, just shortly after the market close here. The markets really took in a lot today and this week with the Fed comments, interest rates. You have the apparent end of the Iran conflict, which we're very optimistic about that. Hopefully, it sticks. Yeah, the historical IPO with SpaceX earlier this week. It's been quite a week so far. So I'm starting with stocks. The market was sharply lower today after the Fed decision. The S&P was down roughly 91 points. The Nasdaq was off about 350 points. Small caps held up a little bit better, which maybe that's maybe a little green shoot there, but hopefully this is more of a digestion day. The big story clearly, though, was the Federal Reserve. Kevin Warsh chaired his first Fed meeting and, kept Fed rates unchanged, which was widely expected. That was no surprise. The important part, though, of today was not necessarily the Fed decision, but really what the messaging was all about, what comes next. So the Fed's projections clearly were more hawkish. 9 Fed officials now expect at least one rate hike this year. 8 expect no change, and only 1 expects a cut. So the market's clearly pricing in a cut later this year, probably in the fall. That's a meaningful shift from earlier this year when investors were, hoping that interest rates were gonna be lowered, and we'll dive more into Chair Warsh's comments as we go through them later tonight. But it was a clear indication that there's a new sheriff in town, and he's going to make some pretty significant changes. From doing away with a lot of the traditions and even ending forward guidance offered by the Fed, and that's a pretty significant shift. But we'll see how things develop. But he sent a clear message that he's in control and things are going to change. For bonds, this means that the higher for longer camp is probably still alive. The 10-year Treasury around 448, the 2-year around 420, and at the long end of the curve they were flat most of the day. But the bigger message that rates remain high enough to compete with stocks. That's why we continue to believe that investors should not ignore the bond side of the portfolio, as inflation was clearly in focus. When you look at geopolitics, we had an indication earlier this week that the Iran war was coming to an end, and there was a peace deal reached. The details are still yet to be explained. But the market really liked that and was reacting very positively. And then obviously when the Fed came out today, that and the fear of inflation and how hawkish the tone was, that really spooked the equity markets. The SpaceX IPO was very hot this week. There was a lot of excitement behind that. We even had a very interesting value play on that as well that a lot of you are familiar with. The SpaceX IPO was priced at 135, and earlier in the day today was trading well above 200, but also sold off after the Fed comments as well. So it's going to be very interesting to track how the markets respond after digesting these Fed comments and really look into the Iran peace deal and whether there's belief that it's going to stick, and if both sides are going to keep the peace. But the early indication is that the market did not like the hawkish tone from Chair Warsh. So as always, enjoy this beautiful day that we're given, and we'll definitely be back in touch next week and see how both the stock and the bond markets react after really digesting the Fed's comments today. Thank you all again, and have an awesome day. Bye-bye.